The European economy is on its way of dodging recession this year. That's if business activity across the 20 euro countries, the EU countries, continue to expand as they have been. Falling energy prices and the easing of supply chain stress has seen growth in business. Meanwhile, things are looking a bit gloomy for the UK economy. The latest numbers there are showing a decline in business for that part of the continent. Rising cost of living, export losses and higher interest rates could see the UK slip into recession. Well, let's discuss this further now with our UK correspondent in London, Olly Barret. Olly, good afternoon. We're coming to you live just over an hour of an announcement here of a hike in our interest rates by 25 basis points. And globally, we are told that economies, including that of the UK, are really a bit cautious and people are worried about a possible recession. What's the latest in the UK?
Yeah, well, when you come to interest rates, Dan, a similar picture in many ways as you're seeing in South Africa, although on a slightly different scale. The Bank of England here in the UK is expected next week to raise interest rates again in what has been quite an aggressive period of trying to hike rates to try and get inflation down. UK interest rates, the key interest rate currently at 3.5%. We expect that it may go up to as high as 4% next week. One of the other things to say about UK interest rates is that towards the end of last year, there was some expectation around the time when Liz Truss was briefly, you'll remember, Prime Minister, and Kwasi Kwarteng was briefly Chancellor, and they put forward their tax-cutting budget. Well, at that point, markets got really rattled and thought that interest rates in the UK could hit 6 or 7% this year. Well, now that the Liz Truss administration has gone and there's a bit more trust in the government from financial markets, current market expectations are actually that interest rates may only get up to around 4.5% this year and could even be falling by the end of the year. That has huge implications for the UK economy because there were real fears that throughout the course of 2023, thousands and thousands of households might find real problems when their mortgage rates are readjusted and their monthly outgoing mortgage payments were due to significantly spike. That threat may be receding, which may be some good news for the UK economy. But as you were suggesting, there have been some very mixed bits of data out from Europe and the UK in recent weeks, which still lead some people to suggest that looking at 2023, the UK may well be in for a more difficult ride than perhaps some of its European neighbours.
Yeah, and some of those European neighbours, apparently they've started the year with a bit of expansionary news and in terms of benefiting for the fact that, the price of oil is coming down, so there's a drop in energy prices. The rest of Europe feeling a little bit more upbeat.
Yeah, it looks that way. You were referencing that business activity data across the 20 euro countries, expansion in January for the first time in 6 months. And you have to compare that to the UK's January PMI survey, which showed us the steepest decline in business activity since COVID-19 lockdown 2 years ago. We also saw business confidence in the UK hitting minus 23.4 points, according to a reading from the Institute for Chartered Accountants in England. That is the lowest reading since 2009. So you can see why there is potentially divergence when it comes to the UK economy compared to the European economy. That said, there are elements of optimism around the UK economy as well, which might mean that the worst is avoided. The Bank of England and the OBR, Office for Budget Responsibility in this country, were forecasting that we would already be in recession in the UK by now, and that the next year, 18 months, would see a long drawn-out recession. Well, that might be avoided in terms of the near future because when we saw the latest ONS figures coming out in November, it showed growth of 0.2%. Now, that's not very much, but what it means is that when we get the data for December, we will have to have seen a significant drop-off for a recession to have been hit because technically, as you know, you need 2 straight quarters of negative growth to technically be in recession. And since we saw that growth in November, then we won't see contraction in the final quarter of last year unless the December number is really very ugly indeed. And you may think that doesn't necessarily mean a huge amount of difference if the economy is 0.1, 0.2% different in terms of growth or contraction. But politically, it's a huge deal. deal, and in terms of confidence it can be a huge deal for a country to not yet be in recession when it was already forecast to be there. Energy, you mentioned. The Europeans are having some good news in terms of wholesale costs coming down. We're seeing a similar trend in the UK as well, and one of the reasons that could make a huge difference to economic prospects for the year is that the government last year unveiled an energy support package for households and businesses, and depending on where the energy price went when it comes to oil and gas, that was going to cost potentially up to £150 billion. Well, given that the wholesale prices are coming down significantly, that should mean that that government support package is significantly cheaper than was predicted at the time. That will give the government some more wiggle room as well. Inflation as well, down to 10.5% now, still at multi-decade highs according to the latest numbers, but that's down from over 11% in October of last year. So certainly some economists believe that inflation is starting already to head in the right direction, and that would be better news for the UK economy as well. So potentially a very difficult year ahead. There are reasons for optimism. There are also plenty of reasons for a great deal of caution as well when it comes to the UK and its continental neighbours.
Thank you very much, Olly Barret, for that comprehensive update about the economic situation of the UK and Europe. They are expecting a rate hike as well next week. We've just had one here today announced by Lisicha Khanyago.